Hey everybody, in this video I'm going to get right into Voyager's earnings, but I wanted to give you some key points first off. So they saw a 70% year over year revenue increase. They got 103 million in revenue, although that was a decrease quarter over quarter. Their last quarter was 150 million, but we did expect this and they were pretty much right in line with revenue. Now they did miss their EPS. They got a negative 32-cent EPS, a negative quarter, and it is one of their worst quarters in recent history. And this is mainly due to just the decrease in price in Bitcoin and crypto winter, of course. Now, before I roll the video, I just also wanted to mention that verified users grew 9% quarter over quarter. Their assets on the platform did decrease, but this is due to the price decrease in crypto, obviously. And this isn't reflected in this quarter, but the CEO did mention, as of recently, their account growth has been higher than some of the best months in 2021. But we will see about that in the next earnings. And they also said that they plan on working towards making their rewards program profitable by the end of the year. Now let's get right into this. I'm going to catch up with you guys in a second. Don't forget to like, subscribe, hit the notification bell, and let's roll it.
This morning we announced that Voyager has obtained subscription agreements for a private placement with gross proceeds of approximately $60 million led by Alameda Research, which was a follow-on investment from their strategic investment in October. We are excited to have them lead this round with additional investment from strategic investors and partners, including Galaxy Digital, Blockdaemon, and Digital Currency Group. These participants are deep industry players who partner with Voyager as we pursue our goals to deliver quality execution, custody, staking, lending and borrowing, and will assist in our expansion into NFTs and Web3. This investment shows the dedication to and power in the Voyager model and how much these partners value the Voyager relationship. These funds raised through a PIPE offering add to our existing net liquidity position to give Voyager a position of over $225 million of available capital. Closing of this fundraise remains subject to customary closing conditions, including approval of the Toronto Stock Exchange.
And really quick, guys, I wanted to remind you that if you want to listen to the full earnings call, I will leave it down below. It is about an hour-long call, but there's definitely a lot of details that didn't make the cut in this video, so check it out. And also, don't forget to check out Voyager Digital, the app. I do have a link below, and if you put in 100, you get a $35 reward. That's an instant 35% gain. Check it out.
Voyager's strengthened liquidity position allows us to continue to grow our business, and together with the changes we continue to make in our cost structure, puts the company in a strong industry position to weather any protracted market slowdowns going forward. On our last call, I noted that we were aggressively working to turn our rewards program from a marketing cost to a profit center. I am happy to report that changes underway as we adjusted the program on May 1st to significantly improve profitability for the June quarter and moving forward. As the marketing landscape continues to change, we are using our collective years of experience to continue to develop cost-effective programs and intend to make additional changes to maximize capital efficiency and continually optimize our cost per account acquisition. The company has also begun a strategic review of all expenses and is committed to reducing expenses to keep the business streamlined and efficient in both expanding and contracting crypto markets. We think these changes will deliver profitable quarters even as we face market headwinds. Not all stablecoins are created equal. We operate using the USDC for customers, which in my view is the only true stablecoin as it is backed by a full reserve of US dollars and short-term US treasuries with a monthly attestation performed by Grant Thornton, one of the leading public accounting firms. We also spoke to all of our counterparties on lending and verified that there were no issues. All Voyager customer US dollar balances are held by our banking partner, Metropolitan Commercial Bank, and are FDI insured up to $250,000. We are a customer-focused business and therefore concentrate on the safety and security of customer assets. And lastly, over the past week, we have seen a significant increase in trading volume and account growth. Now, for our industry as a whole, the March quarter kicked off a challenging macroeconomic environment and lower trading volumes. But Voyager continued to deliver customer account and net deposit growth, build on our revenue diversification strategy, and expand our coin and product offering. Despite the challenging operating conditions in the quarter, customer engagement on the Voyager platform remained healthy. We had over 1 million unique users engaged with the Voyager app during the quarter, representing almost 30% of our 3.5 million registered users. And while we saw an overall decrease in trading volumes, 25% of our nearly 1.2 million funded accounts executed a trade in the quarter, all through our award-winning mobile app as we added another 28 coins, reaching over 100 coins available for trading. These key metrics are something I get very excited about, as they are strong indicators of the level of engagement that Voyager customers have with our platform. We also saw a significant growth in our USDC balances, and we believe many of these customers hold USDC while they wait for trading opportunities. There was a similar pattern in 2001 in the online brokerage industry, as consumers sold their equity positions, held the balances in dollars. They then redeployed those dollars later to re-engage in the next bull market run. Same pattern we see right now with the significant expansion of USDC being held by customers. I saw this in the internet bubble burst in 2001, and I saw it start again this past week. We are now staking 12 coins through our partners with plans to add more this quarter. As we continue to grow the staking program, our average revenue per account, our ARPU, will continue to grow. The monthly ARPU for the quarter was approximately $24 per account in a lower transactional volume market, which annualizes to $288, delivering a return on our marketing dollars of approximately 10 months, demonstrating the effectiveness of our marketing program. Our app consistently ranks high among crypto-first apps in what we believe is the most competitive category in the App Store. And we recently won some significant awards, including Top 10 Most Innovative Personal Finance Company for 2022 from Fast Company, and Top 100 Fastest Growing Online Brands in the U.S. from SimilarWeb. We think the best way to engage new users and to grow the crypto ecosystem is thoughtful marketing that engages and educates new customers. With that in mind, we recently launched our Crypto for All campaign that brings more humanity and accessibility to the world of crypto as it appeals to a mass audience. The campaign features Voyager customers from a variety of backgrounds sharing their thoughts and experiences with crypto and Voyager, highlighting transparency, inclusivity, freedom, and opportunity. We've seen great results so far and are very pleased with the level of engagement.
Next up here, the CEO is going to talk about the USDC-based debit card, but I'm curious, let me know in the comments below if you guys have signed up for it yet. I am still on the wait list.
Already this year, we have launched our popular Moon Mode and have onboarded customers to the beta programs for both our debit card and our desktop app. The debit card beta program is going well. We are seeing high engagement and learning more about user behavior. Based on the success of this beta program, we are pleased to announce that our issuing bank partner, Metropolitan Commercial Bank, and our program manager, UCO, have agreed to move to full widespread launch. As we onboard the waitlist of approximately 200,000 users through the remainder of this quarter, we will obtain significant data that we can then utilize to deliver an even deeper and more robust Voyager loyalty program based on the very popular VGX token. The next upgrade to the Voyager loyalty program is in development, and we have pre-announced that the base participation level will begin with only 50 VGX tokens held and will allow customers to advance to new levels by using the app and Voyager ecosystem. In addition to the delivery of debit cards, we anticipate a widely expanded deployment of the desktop app as well in the current quarter. The addition of the desktop, combined with more coins added to the platform, underscores our commitment to delivering more value to our customers. We were recently the first platform to launch ApeCoin, which helped drive both trading and customer acquisition. Our payments business has started to get some significant traction as we have added 3 payment service systems in the quarter, and we have added some major merchants to the system, as well as launching our business platform, which has added a significant number of accounts in the quarter, growing 28% over the December quarter. This is all on top of the Coinify system being core to international expansion coming over the summer. Another area of activity I want to provide an update on is Voyager's venture investments. We strongly believe investing in the digital asset ecosystem. Over the last 12 months, we have made a number of equity investments in private companies. Previously disclosed investments include Fundstrat, who Voyager partners with on digital asset research, led by Tom Lee, CoinLedger, who Voyager partners with on tax preparation, and Talos, a cutting-edge trading platform we use. We have also made some investments in companies that supply some of the infrastructure needed to support the business, such as Socure, our KYC, Know Your Customer provider, UCO, our ACH provider and debit card program manager, and Blockdaemon, our node provider. The investments have grown in value since all initial investments. We're excited about the future. We believe participating in the financing rounds of select blockchain-associated companies and infrastructure providers is not only a potentially lucrative investment activity, but also an effective way to stay fully current in a rapidly evolving crypto environment. Focus on venture investment activities. I'm happy to announce we recently formed a new subsidiary called Voyager Digital Ventures, LLC. The subsidiary formation is only part of our ongoing efforts to further centralize and hone our investment activities. As you know, we spent calendar 2021 investing to create a truly scalable and more mature platform. The investments we've made and continue to make allow us to successfully build out our operations and strengthen our foundational core through automation, tooling and scalability, improvements, and continually improve our customer service.
So this next part is kind of about just the regulatory issues. I did save a couple parts from the Q&A regarding that, and also the CEO's thoughts.
I'd like to provide an update on the regulatory front. As we have shared in press releases, we have been in ongoing dialogues with regulators. Our businesses remain largely unaffected to date. Voyager's ongoing communications with these state regulators are geared to better understand the terms of their respective orders and clarify certain statements in the orders that Voyager believes are inaccurate. It is Voyager's goal that these communications will result in a collaborative and constructive dialogue on an acceptable path forward. Voyager's discussions to date with the regulators demonstrate a willingness to work with Voyager to pursue a mutually acceptable regulatory framework. The company believes this provides an opportunity to contribute to the evolution of the regulatory framework for crypto, which is needed more than ever due to the unprecedented growth in the adoption of American consumers. In closing, we strongly believe that we are in the early stages of global crypto adoption, and there is an outstanding opportunity for Voyager to grow users and revenue as we execute our game plan. As part of this growth, we have a goal of returning to positive operating income after adding back stock-based compensation in early calendar 2023. Voyager is at the forefront of displacing traditional banks and brokerages through the use of digital assets, and I couldn't be more excited about our future.
One other question, if I could given that the cease and desist came at the end of the quarter, can you give us any perspective on how much impact the business might see from the cease and desist?
We've seen zero impact from the cease and desist. Business is as usual. We have and will continue to operate, as I said in the statements, is that we're working with each of the states, and they seem to be very open to working through all those orders. Well, Kyle, thanks for taking time this morning. Appreciate it. Look, as we've been saying for a long period of time, we've had ongoing conversations with all regulators. It's part of being in a regulated, or in this case, an unregulated business, but being part of in a regulated business for 20-something years. The conversations with regulators are always ongoing. We don't believe, and we've said that in the statements too, we don't believe that these are securities, what we offer. There are multiple paths. If the path that's determined is to register, then we have multiple ways to do that as well. So we're just going to keep having the conversations, but I don't think there's, in my mind, there's a lot of paths forward here, and it not necessarily has to be registration.
All right, my friends, let me know in the comments below what you think about Voyager Digital and their earnings. Were you happy with the results? And also, how are you feeling about VGX token? Let me know down below. But thanks as always, guys, and see you next time.